Who really controls the money in your pocket? Is it the politician you vote for? Is it the billionaire tech moguls? Or is it something much more calculated, quiet, and powerful? Stay here, I'm gonna tell you all about it. Welcome to TradingBits. This channel is all about decoding the economy from the ground up. No noise, just signal. Whenever the economy wobbles, you see the headline: the Fed hikes rate by 50 basis points, or central banks wants a global slowdown. Most people read those words and their eyes glaze over. They think it's just finance noises. But here's the reality: if you don't understand the central banks or the Federal Reserve, you don't understand why your rent is going up, why your stocks are crashing, or why your grocery bill looks like a phone number. Today on TradingBits, we're stripping away the politics and the mystery. We're going to look at exactly what these institutions do, why they were created in the first place, and most importantly, how can you finally understand what are they saying when you hear them on the news. Before we dive into the why, I want to ask you a question. Do you think a central bank primary job is to make the economy grow, or is just to keep it from falling apart? Type growth or stability in the comments right now. I'm curious to see where your head is at before we start. Why they were born, the chaos of the past. To understand the what, we have to understand the why. Imagine a world with no central bank or Federal Reserve. In the late 1800s, the United States was in the wild west of finances. There was no Federal Reserve. Every private bank could essentially print its own version of currency. If a bank made a bad loan and ran out of cash, people would panic. They would sprint to the bank to pull their money out. This is called a bank run. And because all banks are connected, one bank failing would cause a domino effect. People would panic at every bank. The entire system would freeze and the economy would collapse into a depression. The breaking point was the panic of 1987. The entire US financial system was minutes away from total annihilation. It only survived because of one man, J.P. Morgan, personally gathered the richest bankers in New York, located them in his library, and forced them to pull their money to bail out the system. The world realized we couldn't rely on one rich guy to save us every time. In 1913, the Federal Reserve was created. It wasn't built to be a money printer for politicians. It was built to be the fire department. Its only purpose was to stay calm when everyone else was panicking and provided liquidity, which is just a fancy word for cash, to banks that were struggling but still healthy. The three master functions. So what does this fire department actually do all day? It had three main jobs. Monetary policy. Think of the economy like a room and the central bank as the thermostat. If the economy is too hot, meaning everyone is spending too much, credit is too easy to get, and prices are skyrocketing, inflation, the central banks turn to dial. They raise interest rates. When rates goes up, it's more expensive to buy a house or expand businesses. People spend less, the room cools down, and inflation drops. If the economy is too cold and we are in a recession, they do the opposite. They lower rates to make money cheap, encouraging you to go out and spend or invest. The lender of the last resort. This is the safety net. Most people think their money is sitting in a vault at the bank. It is not. It is out there at someone else's car loan or mortgages. If a sudden crisis happens and everyone wants their cash at the same time, the bank doesn't have it. The central bank step in and lend that bank the money it needs so the doors stay open. This prevents a small problem from becoming a national disaster. Supervision and regulation. They are the referee. They set the rules on how much risk a bank can take. They check the books to make sure the bank isn't gambling with your life savings or some crazy investment. Without the referee, the game of finance becomes a free-for-all where only the biggest players win. What is the Fed actually saying? Now let's talk about those confusing news segments. When you see Jerome Powell, the chair of the Federal Reserve, standing on a podium, he's usually talking about the dual mandate. Unlike other central banks that only cares about inflation, the Fed have two bosses: price stability and maximum employment. They are trying to keep prices low while making sure everyone has a job. It's a brutal balancing act. If you hear the terms basis point, don't let it scare you. 100 basis points equal 1%. So if the news say the federal hikes rates by 75 basis points, they're just increasing the cost of money by 0.75%. You'll also hear about quantitative ease. This is the heavy machinery. It is when the central bank doesn't just change interest rate, but actually goes into the market and buy billions of dollars in bonds. They flood the system with cash to jumpstart a dying economy. When they start doing that, that is called quantitative tightening. It is the Fed taking the punch bowl away from the party to make sure nobody gets a massive inflation hangover. If this is starting to click for you, do me a huge favor and hit that like button. It tells that you value this kind of a deep dive content, and it helps TradingBits to reach more people who are tired of being confused by the news. Independence of the Federal Reserve. Why aren't these people part of the government? Because of human nature. Politicians want to be re-elected. To get re-elected, they want the economy to be booming all the time. If a politician controlled the money, they would keep interest rate at zero forever to keep the party going. But that leads to hyperinflation, where your money becomes worthless. Central banks are designed to be independent. They are the adults in the room who have to make the painful, unpopular decision like raising rates right before an election to protect the value of the currency for the next 20 years, not just the next 20 days. To wrap this up, a central bank isn't a magic wand. It's a regulator. It provides the trust that makes our money work. When you hear about the Feds tomorrow, remember they're either adjusting the thermostat or checking the fire extinguishers. But the central bank is only one piece of the puzzle. It's the engine. But what about the rest of the chip? How does this interest rate actually travel through the commercial banks into the stock market and affects global trade? That is the financial system, the big picture. And that is exactly what we're breaking down in our next video. You don't want to miss it because we're going to connect everything we learned today into one giant map. Subscribe to TradingBits. Share this video with someone who still thinks the Fed is just a building. And remember, money, markets, we're trading the future. See you in the next one.